afternoon, ladies and gentlemen, and welcome one and all to this afternoon's Markets Now market report overview event. Hope you're all doing well out there at the moment. And yeah, let's get the show on the road. Good afternoon to you, Matthew. Good to see you, buddy. So this week, team, we have the highlight of the CPI trading event that is being hosted by myself here at the UTC tomorrow afternoon at 1 p.m. We'll be digging into the data and going through that in real time. Hopefully get a couple of trades off as well if the event is as big as we hope it's going to be. Hopefully going to get some decent volume and market volatility out of that one. Now that we don't have Fed Chair Powell heading up the Fed anymore. He's only on the Fed from an advisory point of view, I think, at the moment, until he completes his finishing period and he's gone. So yeah, we've got there's a lot of things to consider. So aside from that, we'll come on to that anyway. Aside from that, our four main primary trading pairs for this week in terms of the market report trading opportunities, we are looking at the Standard & Poor's, the CAD versus the Japanese yen, natural gas, and silver this week. I've decided to list over gold. And this is due to improved structure, I would say. The chart looks a lot cleaner on silver at the moment. And if we do get a rejection from the current point of liquidity there, we've got a really nice trading margin down to the ascending level. But we'll come on to that one in a moment. So, first of all, the Standard & Poor's. We have seen exceptional growth in the US technology sector. It's ramped up natural gas. It's ramped up the NAS 100, and so we've seen that just take the markets by storm, as it has done over the previous years as well. But this year is no different. It's just accelerating at an exponential rate. And the Standard & Poor's, which is backed by 49% technology stocks now, is pretty much in the same realm. We've seen a massive break of structure, and the market just hasn't really stopped going. We haven't had too much in terms of decent price action pullbacks, and I think this week, with the CPI event, with everything else going on at the moment, that we could indeed see a week where the Standard & Poor's comes back for a relatively decent retest before we get the next leg of the move and the continuation to the upside. So that's my feeling. That's my thoughts on the Standard & Poor's, and I do believe the same will go for the NAS 100 as well. Good afternoon to you, H&C. Good to see you, man. So that's my thoughts on the H&C. That's my thoughts on the S&P. So moving over into the CAD yen, then we've got decent availability for breaker structures on either side of the market. Decent breaker structure on the downside there to the previous low. We've got a decent breaker structure point for a marginal trade back up to the previous high. So we've got decent marginal gains on either side, or margin availability on either side of the market here at this time. So it's going to be interesting to see how the CAD yen plays out over the next couple of days. I'm not saying that this trade idea on either side of the market will be completed this week, but I definitely think it will be done by the end of the week, maybe even leading into Monday, Tuesday next week. So we might be holding on to this one for a little while once it triggers. But it's a really sweet trade idea in the FX space at the moment that doesn't really encompass a lot of decent trading opportunities. So it's definitely one to keep an eye on. As we move down into natural gas, looking for ultimately the continuation of the range. Market is trading on the underside of big daily liquidity here at the moment. The pressure is building, but the market doesn't really want to seem to break out and make any new highs up here at the moment, although we have seen a lower low. We've kind of seen the same high. The market is just resting. So I think from this area, it's pretty good idea to consider shorts away from the liquidity and then looking for the potential for a breakout. I mean, we've got option number one, which is the short from here down to here. And then we've got the option of the breaker structure below that point down to the previous low. So we've got a couple of trade ideas that we can kind of break down into intraday trading opportunities, both of which look pretty decent, and hopefully we'll be able to walk away with at least one winner in natural gas by the end of the week. And then this ties in with silver. Silver continues to show, as I've written down here, constructive, bullish structure overall. Much better than gold at the moment. Really nice pattern that we can see here on the daily time frame. And I believe that if we do get the rejection from the previous high, that ascending level is the natural next step, the natural next destination for silver to reach. The margin between the breaker structure point and the ascending level both make for a very, very tidy trading opportunity, especially when the stops are going to be at the 50% point between there and there. You're looking at a 1 to 3.5, and that's just straight off the bat without any kind of manipulation at all. So we could be looking at a really decent return. Again, this one hopefully will be closed out by Thursday, Friday this week, and we don't have any major economic data releases to shake things up. So it should be pretty natural, pretty organic for the market to go down there, which is obviously good news all around. Now, moving down into the market challenges, good segue there. So market challenges this week, it's all about the US Consumer Price Index. We've got the US Consumer Price Index and the Core Price Index. I've just noticed a typo there on that one. So I will... do you know what? Doesn't even matter, does it really? That's fine. We'll just pretend that didn't happen. But we've got the US Core Consumer Price Index down here as well. At an 8 out of 10 this week. So it is looking pretty significant in terms of the level of volatility that we could be expecting from it. 7 out of 10 for the base consumer price index data. US PPI just made it on there at a 2 out of 10 as well. And this is directly relevant to the trade ideas that we've got up above. Moving down into the SSV, the S&P 500 right the way through to silver is looking so incredibly balanced at the moment. I would say the S&P 500 is probably the most bought, isn't it? You know, and 53.81, it's not anything to shout home about. VIX actually lost 2% of its figure there as well. So we have had a 2% reduction in market volatility from last week to this week. Everything else is so even, it's so evenly balanced right now. So it's not great when you're kind of counting on that volatility, but at the same time, you can get better trending markets when things are balanced like this. You do often get sort of nicer intraday, intra-week trends that you can profit from. So there's pros and cons to both, and hopefully remaining on the side of optimism, that's what we're going to see this week. Good afternoon to you, Jack. Good to see you, mate. So as we move down here into the economic and order book report, then US Consumer Price Index, US Core, we've got an 8 and a 6 actually, which is quite a differential from the one that we had above. And US PPI just scraped through into terms of broad market impact at a 1 out of 10. That's a non-impact event for me, to be honest with you. You're probably going to get a 15-minute spike as a result, but not much else. So probably count that US PPI out. And just really focusing this week on tomorrow's CPI event. Moving on down to money flow trends. Again, ultra balanced fixed income markets, commodity markets, indice markets. This is total liquidity, remember, that I've got access to. So that's all retail and non-retail liquidity there. And it's just so evenly balanced at the moment. I'm not really surprised that the VIX index has actually lost 2% off of the volatility when we're looking at numbers like this. So not really too much to report there, guys. There's nothing major to report. We haven't got any other major economic data points this week out. The geopolitical backdrop is still quite volatile, but it is calming down quite significantly from where we were in previous weeks / months ago. So it really does feel like, you know, everything's kind of taking a little bit of a breath as we sort of embark into the next chapter of the year. And then we've got the equities in focus. So this week we've got the 4 up here. The major spotlight equity of the week, Kratos Defense and Security Solutions. Very, very interesting one that you guys should be looking at. And this also comes directly at the same time as if you scan our eyes over to this area, institutional buying interest by sector, defense has taken the #1 spot by hedge fund investment with 3.2 billion US reinvested into the defense sector over the weekend. That is literally from Friday evening to Monday morning. That is the number. So a lot of money going into defense at the moment. This one in particular definitely looks like a standout equity for a maybe, you know, maybe 2 to 6 months timeline approximately. So yeah, definitely worth a look. Definitely worth a look. Right, so that's pretty much a wrap there on the market report there, ladies and gents. And for those of you out there on YouTube, of course, just in terms of the disclaimer here, the information provided in this market analysis report is for informational and educational purposes only and should not be considered as financial advice or a recommendation to trade or invest. If you'd like to know more, please head over to the website. You can get all of the T's and C's and disclaimers there at your own leisure. And for those of you on YouTube, remember that you can come in and download a copy of this market report entirely for free under the basic UTC member plan. Okay, you do not need to cough up any coffers for this whatsoever. So please feel free. To go in. To go and take a look. Jack asks, "Are you already in it in terms of Kratos?" I have been in and out of Kratos over the years. I am not currently in it. But I've repeatedly been buying in and getting out. For me, this one is more of a... I have quite a playful relationship with Kratos Defense. Really, it's not something that I've ever considered to buy and hold. But I kind of jump in and out when the opportunity arises. That's I'm a opportunist, I would say, when it comes to this particular equity. Right. Let's get going then. Have a look at the US Open for this afternoon. And see what action-packed session we've got ahead of us. So the US 30 Dow Jones, NAS 100, and the S&P 500 all look very, very different. The NAS 100 and S&P look superb right now. I mean, the NAS 100 it's just a complete and utter rocket, isn't it? The US 30 Dow Jones is struggling heavily. Industrials really taking a bit of a beating at the moment. Looking at the NAS 100 and the S&P 500, I can't help but think shorts are incoming. Obviously, I've put my money where my mouth is. Market report this week, looking at the shorts there as well. But it just does. It really, really does. Now, if I'm looking for an intraday trading opportunity, I'm certainly going to be looking for a break of structure at around this area here where the price line is. So nice little break of structure. Target profit down at 73.78. Stop loss approximately 73.93. Beautiful risk reward ratio there as well. That just looks really good overall. So that would be trade idea number one on the S&P 500. If you want me to be crystal clear on exactly what I'm looking at. So entry, target, and your stop loss. Right, so that's the kind of trade idea that I'm looking at here. With regards to the NAS 100, it's very, very much the same thing. Very much the same thing. So breaker structure is at that area in there. Your target profit for this NAS 100 trade is going to be about here. And you'll be looking to clear the distance between. So then short is going to be entry here, targeting there. Stop loss at about that level there for 1 to 2.5, and that will be your short in the NAS 100. In terms of the US 30 Dow Jones, everything changes. So for the US 30 Dow, yeah, we're trading directly in the middle of the two available points of entry, which is it's a little bit annoying. But we have the access point for a long about there, and this is on the basis that the market dips and then rallies. So long would be from here up to the high, with the stop loss at probably about that level. I mean, that's a 1 to 3, and that's a really healthy stop. So yeah, so that would be the long trade. And I wouldn't worry about the short, actually. We've got two shorts in the NAS 100 and the S&P. The only long we have is on the proviso that the market drops first, which isn't great. I mean, this area in here. Yeah, so that's the only availability really in the Dow Jones today. I guess We've got the break close retest already taking place on this one, so it's such a long distance away. I think we could have a break of structure in here as well. And then this would act as the no man's land. So if the market dips down into anywhere into this area and then gets the rally back, we could then look at a trade idea long in the NAS 100 as well. But this won't be available in the S&P. So that's a 1 to 3 about there, isn't it? So yeah, we'll have the stop loss down there. Yeah, that's pretty much where we're at with the US stocks. So that's those three. Let's have a quick look down at silver. So silver has gone for a big breakout as it's just literally happened this afternoon. Upon the commodity opens, we've actually gone for a nice big breakout intraday. We do need to see the full break close retest before we get, any kind of excitement about the potential for a long here. This area has already been hit before and we've come right the way down. It was actually at this stage that was at the beginning of a major turning point in silver. We ended up trading short from Friday the 17th of April down to the 29th of April. So definitely spent a while trading short from this area before. So yeah, definitely not out of the woods on that one. And there's still all the opportunity there for us to take. Looking at CAD yen at the moment. Still relatively range bound. We need to let the market find its feet, to be honest, before we have a look at that one. Looking at gold. We're looking at the possibility of a long above 47.66 up to 48.20. Shorts down here below 46.17. We've already did those two trade ideas last week anyway, so we'll just try and copy and paste the process from those. UK Brent at this moment in time doesn't look very nice. Trading inside liquidity here at the moment, isn't it? So we need to see the break of structure above 110.20, I would say. And then we can get possible moves up to 116. Natural gas at the moment, trading at 27.43. Again, inside big liquidity. Need to wait for the market to take a dip. Sell in at around 255. Take profit around 248. Stop loss at around 259. On that, but we can, again, these won't be for the day. These will be trade ideas that will drop in and out throughout the week, and we can cover those in the live sessions that are up and coming. Yeah, and that's about it, team. That's about it for this afternoon. So, are there any questions? Absolutely fine. If not, it's not a problem. That means we're all clear. All good, H&C. Thank you very much, buddy. I'm glad to hear it. I'll post up the trade ideas momentarily into the UTC fund alerts. You guys can get access to them there. All good, Matthew. Good job. All right. Well, listen then, guys. I will call it a wrap there then. We are currently at 10 to 2 in the afternoon, which means you guys have got a nice amount of time. Grab yourself a drink and food before the US Open kicks off. I will be back on tomorrow, of course, in the morning. I will then be back on again for the CPI trading event, and I will be active and online all day today. For anything that you may need or want. So please feel free to hit me up. If not, then have a fantastic trading session. Let's go see what we can do. And I look forward to catching up with you then. Cheers, guys. Take care. Bye-bye.